Good afternoon. This is Randy Smotone with InvestSharp with your Wednesday, November the 4th market update. On the economic front today, we had the ADP employment report, which showed a loss of 203,000 jobs, which is an improvement over the previous month's 254,000 jobs lost. The monthly Federal Open Market Committee statement came out this afternoon, FOMC statement, with very little change to the language compared to the previous month, but let's go over and take a quick look at it. So I'm over here at the federalreserve.gov website. Take a look at the September meeting minutes. So the area we were really focusing on is right here. Okay. Previous one, it said the committee will maintain the target range for the federal funds rate of 0 to 0.25% and continues to anticipate that economic conditions are likely to warrant exceptionally low levels of the federal funds rate for an extended period. To provide support to mortgage lending and housing markets and to improve overall conditions in private credit markets, the Federal Reserve will purchase a total of $1.25 trillion of agency mortgage-backed securities and up to $200 billion of agency debt. So that was the previous months. So now let's go take a look at the November statement. Looking in that same area, which is what was being really focused on the most. Okay, so here's the October. The committee will maintain the target range for the federal funds rate of 0 to 0.25% and continues to anticipate the economic conditions, including low rates of resource utilization, subdued inflation trends, and stable inflation expectations, are likely to warrant exceptionally low levels of the federal funds rate for an extended period. To provide support to mortgage lending and housing markets and to improve overall conditions in private credit markets, the Federal Reserve will purchase a total of $1.25 trillion of agency mortgage-backed securities and about $175 billion of agency debt. So the only change there, they had a few little wording changes here about the resource utilization, subdued inflation, etc. And previously, they had $200 billion of agency debt, talking about purchasing, and now they've lowered it to purchasing approximately $175 billion of agency debt. So they lowered it by $25 billion. That was really about it. So there wasn't a huge big change, but I kind of wanted you to see what the FOMC meetings are like and what everyone is focusing on. Okay, so Cisco reported after the close, and they had earnings per share were 36 cents, which beat the 31 cents per share estimate. They also beat on revenue. The revenue came in at $9 billion for the quarter. The dollar gapped down this morning and stayed down throughout the day. Gold reached another new high today of $1,095 an ounce. So let's go over and take a look at the ETF GLD. And you can see here's today's candle. So not a big old candle like we had the day before, not as much buying, and this candle is, it's kind of an indecisive candle. There was definitely buyers and sellers here today. So we'll have to wait and see. Gold might have a little pullback here the next day or two. We'll keep an eye on that. Let's take a look at silver real quick. Same with silver. This candle here is showing some indecisiveness, as where yesterday this big long white candle, there was buying with both hands. But not today. Today was a little more indecision. So let's go over and take a look at the Dow. Dow closed up 30 points to 9,082. The S&P closed up 1 point to 1,046, and the Nasdaq closed down almost 2 points to 2,055. Of course, the Dow continues to hold up better than the rest of the market, as it did today. And in the short term, I'm a little concerned about, kind of what I'm seeing here on the charts. So I'll go over the, let's see here, how about 3 months? Okay, this candlestick is here, as you can see, like we closed not quite where we opened, but it was, close. So, we actually were up way over 100 points during the day, and then we basically late in the day they started selling. So you can go over here, look at the SPX. See here, looking at 3 month, we're kind of in this down channel, kind of popped out of it. Then again, this candle is showing you that we basically closed right here where we opened, which is not very promising. It looks like we're probably going to possibly have a pullback, but there won't be confirmation until we close below this candle, and then I would, be more comfortable saying we're definitely going to go lower. But we'll see what the markets brings us here the next few days. What really concerns me is the Russell. Let's see here. If you look at the Russell 2000, whoops. So you see the Russell, we had a double top here and here. We double top. We broke down here, this big red candle. We broke down around the 580. Okay, so now we're still in this range. And typically, this should have been a support area. Since we broke through it, it now could be resistance for the Russell at 580. So we need to overcome that and close above it, and then I'd be more comfortable, that we're going to go higher. The Russell has, is 2,000 small cap stocks, and typically, your smaller caps are leading, but the Dow's leading right now, so they're definitely being more defensive and buying blue chips. If this does play out, you would take the 625 on the Russell. It's about where the resistance was. Your support was about 580. That gives you about a 45-point difference between here and here, which how they line it. You take the distance from here to here, subtract that from your 580, subtract that 45 points. That would give you 535, which would be my target on the Russell if this plays out, if this double top plays out, which it looks like it possibly could. A lot will depend on this employment reports coming out here at the end of the week. So hopefully this doesn't play out, but if it is, it'll give us a chance to buy stocks at lower levels. So 9 of the 16 sectors we follow finished in the green today. The construction index performed the best by gaining almost 2% on the day. The weakest sector was the bank index, down almost 2%. Of course, that didn't help us because financials need to be leading to bring us up, so that didn't help us either. The VIX, which is called the fear index, was down almost 4% on the day, which was actually a good thing. We could have some support for it right through here somewhere, so we'll have to keep an eye on that, see if the VIX backs on. We've got obviously a lot of volatility right here. We've starting to have a lot more bouncing up and down during the day. Let's go over to the InvestSharp website, take a look at our current market signals. We follow the point and figure charts for the Dow, the NASDAQ, and the S&P. The Dow and the NASDAQ are still on sell signals, and the S&P is still on a buy signal, and there was no changes on that today. No point and figure price objective changes either. All right, that's it for today. Thanks for joining me, and remember to always invest sharp.